We'll just cut across to my colleague Alex, who is going to give us an analysis of the AMFI data. Alex, over to you.
Okay, very critical to look at this data with a very close lens, because we've been speaking about potential redemption pressure in the broader end of the spectrum, and we told you this morning that the numbers for January would actually look good, and that's exactly what has panned out. Because take a look at the overall inflows into actively managed equity mutual fund schemes, and that is stood at 39,687 crore rupees, and if anything it's better than the month of December. You look at inflows into some of these key categories, you look at particularly mid cap and small cap, and you see inflows, net inflows to the extent of 5,147 crore rupees or 48 crore rupees into mid cap funds, and 5,720 odd crore rupees into small cap funds as well. So those numbers looking very, very strong. Thematic, which has been a very key category in terms of the inflows into equity mutual fund schemes, you've seen inflows to the extent of 9,000 crore rupees. And what is interesting to note is that a large part of this is not in the way of new fund offers. Yes, there were new fund offers. There was only one small cap fund that was a new fund offer that has garnered about 1,040 crore rupees. There were 3 sectoral and thematic funds that have garnered 2,838 crore rupees. So total of 3,900 odd crore rupees of inflows from new fund offers out of the 39,687 or 88 crore rupees. So if you think about it, a large amount of the inflows are in the way of SIPs as well as in lump sum investments. The insight that I've gotten is that the lump sum investments have come in, but they have not been as elevated as you perhaps saw in July. I will remind you, in July last year was when you had the election result and you had a sharp drop in the equity markets at that point, and a lot of people deployed funds at that moment. So you had lump sum investments of 50,000 plus crore rupees at that moment. In fact, the average has been closer to about 35,000 or 37,000 towards 40,000 crore in the way of lump sum investments. And of course, you know about the SIP number as well. That had a record high in December. We will know soon enough. The call happens at 12 o'clock and we'll find out what the SIP number was for the month of January. Don't be surprised if that number is lower, because you've seen a higher number of cancellations. What we do know is that on a consistent basis, the net number has remained more or less where it was several months ago, around that 9,000 crore number. So despite the gross number being closer to 26,000 crore rupees, the net number, which is net of cancellation and stoppage, has actually been close to that 10,000 crore mark, but it's been very steady. All of those things are positive. Let's look at another category. And here you talk about hybrid, which is emerging as a pretty important category for the mutual fund industry as a whole. Even that has gotten inflows to the extent of 8,767 crore rupees. And what is the breakup here? You have multi-asset funds that have continued to get a decent amount of inflows, over 2,000 crore getting into these schemes. And arbitrage funds have also gotten inflows of over 4,000 crore rupees. What else do you need to know about? Overall, for the mutual fund industry, they've gotten inflows of 1.9 lakh crore rupees, and this is a very large amount that has come through. It is because you have significant inflows into fixed income mutual fund schemes, and this is normally what happens at the start of a quarter. January, understandably, would see a lot of institutions put money back into fixed income mutual fund schemes, and largely you're talking about the liquid and the overnight funds. So if I look at the inflows into liquid funds, it's to the extent of 91,600 odd crore rupees in the month of January. And if you look at ultra short term or overnight funds, actually overnight funds have seen an inflow of close to 19,000 crore rupees. The money market funds, which are also short term in nature, have gotten 21,900 crore rupees. So this is par for the course. What you should be focusing on, however, is the inflows into equity mutual funds, which have remained very strong. The other number that I would want to check is the index funds, which is mostly equity index funds. Again, it's a very robust number, 5,250 crore 5,255 odd crore rupees coming in as net inflows into index funds. Akhil Chaturvedi is joining us. He's Chief Business Officer and Executive Director at Motilal Oswal. Akhil, thanks so much for taking the time.
Thank you, Alex. Thank you.
So it's an important day to be talking about these numbers. The insight that I got from speaking to various participants in the industry is that the month of January was actually better than the month of December, and that has panned out. The question mark is not about that though, Akhil. Those numbers look great. The question mark is about the redemption pressure in the month of February because of certain panic that is set in about the broader markets. What would you say about both of those two data points?
So, Alex, certainly January month has gone pretty okay, honestly, given the kind of panic which had already set in the month of January, both globally and then locally, the FI selling pressure. One would have thought that probably the pressure on the sales would have been there, but the numbers which have come is very, very encouraging, and actually we have seen a tidbit growth in the net sales numbers as compared to the month of December, which was pretty good. The first few days of, we are on 12th of Feb, whatever numbers I have been tracking, honestly, I'm not seeing any redemption pressure so far. A little bit slowdown on the gross sales, but the net sales is not really impacted, at least in the first 12 days.
So I'm looking at the gross sales in the month of January versus December, and you're already seeing a bit of a deceleration, not very dramatic. But talk to me about your reading of this, because if I look at the month of December and if I look at the NFOs, there were about 11,400 crore rupees garnered for the industry through NFOs, whereas in the month of January, that number is only about 3,900 crore rupees.
3,900, yeah.
And so from that perspective, is it fair to say, Akhil, that the inflows through lump sum have been robust?
Yes, you are absolutely right. And NFOs clearly, if the markets continue to be the way it is, then there would be a slowdown in the NFO numbers, and we would see stability in the existing, all the existing products. So NFOs is going to be a little tough for now, at least.
Talk to me about incremental investments that you're seeing, and maybe some of the chatter as well. You will be aware of your peers and how the industry is also seeing inflows. Akhil, how are the large investors investing, and also how are the retail investors investing? If you have looked at some of the granular data here, what are the family offices, for example, saying and doing, and what are the retail investors doing?
Retail, there is continuity of inflows. I think for the last couple of months, I've been doing these shows, and there was always this question that if the markets go down, will we see a drop in the flows? Will we see investors pulling off? Will we see the redemptions going up? Will we see the SIP numbers slowing down? I think clearly over the last few months, what we have been seeing, and I hope I'm proven right, is that investors have matured. In fact, investors are trying to take the opportunity of dips to continue their flows, if not add incremental flows. So that maturity seems to be there so far. The real thing we have to see is that for the next couple of months, if you continue to drag like this, will we see a dip at all, if at all or not? In terms of client segments, I think retail, as I said, continues to be steady. We are not seeing the large checks as of now, so maybe the family offices or the larger ultra HNI clients would be waiting and watching for some time, but the retail flows not really seeing any major dip, honestly.
The question arises then, Akhil, where is the selling coming from? Because, you've looked at this week in particular, and the kind of drawdowns that you've seen in broader market portfolios, or portfolios that are gravitating towards the small cap side in particular. Of course, we're off the low point of the day today. But then, isn't it mutual funds that are selling? If not them, then who?
It's $1 million question, honestly, which I keep asking, because you have on one side large selling which has come from the FIs, and large part of the FI selling would be in the large cap space, although they still have some holding on the mid and the smalls. But clearly the FI sales is not impacting the mid and small cap correction. Now mutual funds, you have the numbers right up there. We've seen net positive sales in the mid cap, net positive sales in the small cap. In fact, we have seen some NFO collections also, which is largely going into the mid and small pockets because of the sectoral. So there again, the selling pressure is not there. Maybe few managers in the existing products. I've not seen the data, but this is probably my gut. Maybe few managers would have built some cash position in their portfolios. So one needs to go inside those data, especially in the mid caps and the small caps. Maybe some selling coming from that part. Rest, I think it could be some of the other institutions, larger institutions, or maybe it could be in the direct equity from the HNI, ultra HNI family office desk. Maybe there is some selling coming over there. Probably there could be some housekeeping around the year end kind of issues. So it's not to do with the mutual funds. Honestly, I don't see that happening right now.
Okay. Akhil, last question on SIPs, and I have not seen the number for the month of January. But I was speaking to somebody yesterday, and what they were suggesting is that what was booked, and we're not talking about the overall gross, was close to about what 19,000, 20,000 odd crore is what I heard. But
yes, that's it.
Right. So it's not a bad number, but it's lower already than the month of December. What does that tell you? Because you are seeing elevated numbers of cancellations. Is that something that will continue as a trend? Of course, you can't tell, but then will there be an implication of that in the ability of mutual funds to deploy further?
So the final number will come in sometime. Even I have not seen the final number, but yes, what you have on hand, 20,000 crores is the right number. Now that's according to me 86 or 87% of the industry. So when you see 100%, maybe I think in December we were 26,000 thereabouts. It could be maybe 100, 200 crores plus minus. Maybe not a great jump. I think December we saw the number jumping up from 25.5 to 26 to 26.3. Maybe it might be 100, 200 minus plus, not a major decline, at least for the month of January. Alex, all I can tell you is that if the momentum actually starts to die down in the markets and it sustains for maybe next 1 quarter or 2 quarters, let's say next 6 months, at least what history suggests that maybe there could be some slowness or slowdown coming in the retail momentum, in the SIP flows, in the lump sum flows as well. So we need to wait and watch. Honestly, I'm tracking this data at least, every week when we get the data, we are tracking this and seeing if the trend is changing. For now, things seem to be okay. While I'm saying that in Feb, we are seeing some slowdown, but net is still positive. So I like to watch the net number. Net positive sales is a very happy thing or happy state to be in.
Very, very quick last answer on this. The net number on SIPs has been the question mark, right? Because despite that 26,000 number, the net number is very dramatically lower than that. So how long do you think that this will continue? And is this par for the course? Is there anything that should be a red flag here?
No, so the proportion of let's say the number which on a gross basis what we see is about 26,000 crores. We don't have the facts in place. The real number is not known to anybody. There are some operational issues, but I would say that this typically rotates between 55 to 65%. So that means on a 26,000 crores of SIP flow, the real cash flow coming into the markets would be more like 16, 17,000 crores, right?
Okay.
So
my number is closer to 10,000, Akhil.
No, not that low. Not that low. The last report which I had gone through was from Cafe Mutual. They had done some study on this about 8 months back. It was 50%. So if I go with the 50%, then 26 divided by 2, it's 13,000 crores. But some of my other industry friends, there are varied opinions and numbers out here. So I'm just trying to be in middle. So if I take 60%, then we should be 15, 16,000 crores. And that's the right number we should all track. Now, there are certain operational issues between how the data flows between the platforms and the AMCs in terms of actual SIPs getting realized, SIPs getting closed, because of which unfortunately we don't know. But I know for my AMC what is my gross number, what is my net number, and if I just take that ratio, that's the extrapolation I'm doing.
Fair point. Akhil, thanks so much for joining in, and I will be speaking to you hopefully over the course of the next few weeks to try and understand, and hopefully this settles down.
Absolutely, Alex.
I look forward to that. Thank you so much for joining.
Thank you, Alex. Thank you so much.
All right, that brings us to the end of this special broadcast. Do stay tuned, lots more coming up on NDTV Profit.